Hi, this is Tony Torres with Edina Realty Insurance. A frequently asked question I get is in regards to townhome and condo coverage. That particular policy is called an HO6 policy, and folks want to know what's appropriate coverage. These can be tricky because you have a homeowners association that's covering the condo itself or the townhome. So my first recommendation would be to have your agent get a copy of the Homeowners Association Master Policy and take a look at that. Now, every master policy is different, and depending on that association, they could be covering that condo or townhome with walls-in replacement costs coverage, which means that it's very good coverage. They're going to cover your countertops, your floor finishings, your paint, everything inside the condo, basically. So you just have to make sure that you find out what the deductible is, and that you have enough coverage for anything that's below that deductible amount, because your association is not going to cover anything below that deductible. For example, if the deductible is $10,000, make sure you have enough building coverage to cover up to $10,000, or I would recommend stretching it and going to $25,000, which is typically the next level. So again, in other cases, it's a walls out policy, so you have to cover a lot more of your condo building coverage, because you may be responsible for the floor finishings and the wall finishings and the countertops and fixtures in your bathroom. I would recommend that at that point, at least 20% of the value of your condo or your purchase price, if not, in some cases 50%. So you have to really take a look at that if it's a walls out HOA coverage. You want to make sure there's enough personal property coverage for you to be able to replace your furniture in case of let's say a fire, a large loss. All of your personal belongings, your pots and pans, anything that you would want to have covered, and make sure that coverage is replacement cost value coverage. The other things that you want to have is at least $5,000 in $500,000, I should say, in liability coverage, and that protects you against lawsuit. $5,000 in medical payments coverage to others. That way, if someone does get injured at your condo or townhouse, you have coverage as a first line of defense to cover that, so that you don't have to get into your liability coverage. The last and one of the very most important things is loss assessment. Typically, if you hear people getting up in arms, it's because they didn't have enough loss assessment. And that is the portion that the HOA or the Homeowners Association is going to assess you to cover the deductible that they would have to pay in case of a building loss. And many times folks are not prepared to cover that. In many cases, it could be at least $10,000. I've seen them at $25,000. And typically, we would recommend a minimum of $25,000 in loss assessment coverage. So those, in a nutshell, are things to consider when looking at an HO6 policy, which is that gap policy that covers you where the Homeowners Association master policy is not going to take care of your loss on a condo or townhome. For any other questions, feel free to call me at 612-275-1371. Again, it's Tony Torres with Edina Realty Insurance.